Hey, good afternoon, everybody. This is Dennis Wilburn. I want to welcome you to today's session of How to Make Money Trading Stocks, Options, and ETFs. This is a free webinar that we do every Friday. Just want to say welcome to everybody. If you are joining us via, excuse me, if you're joining us on our YouTube channel and or on Facebook, welcome. Please let us know that you appreciate what we're doing by giving us a thumbs up. Please feel free to leave any comments that you feel appropriate. Again, welcome. Let's get started with today's session. Hi everyone, this is Dennis. Encourage you to stick around to the end of today's video. At the end, we'll show you how to become a premium member and save 20% off the regular price. Thanks, mahalo. Okay, again, hi, this is Dennis Wilburn with the Active Trend Traders. Welcome to How to Make Money Trading Stocks, Options, and ETFs. This is Friday, the 12th of July. Welcome to today's session. I want to remind you that all the materials we do present are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or promise of future performance. One thing I really emphasize, and we're really focusing in on this into the second half of 2019 for our active trend traders, learn to focus on the process. That's on my circuit. Thanks, Mark. Learn to focus on the process. The profits will follow, which is absolutely right on. The more I just dig into people who have, like Mark Douglas. Mark Douglas blew up 3 accounts before he really got his psychology down for trading. John Carter, same way. Basically, he would work up his account to about $150,000 and do something then really dumb, and it would blow his account out the bottom side. And so each one of them basically have the same tell to tell. Focus on the process, the profits will follow. The objective of today's session is to provide timely, actionable intel review at the end of the week, seeking to clarify, simplify market decisions so wealth can be multiplied. Market review they're going to be looking at today. The market there's certain stocks that are doing really well. There are other stocks that are doing crummy. I'm just going to count it off for summer sloppiness. And they are waiting on the Fed. The market is really anticipating, to some extent, has it already priced in, that the Fed is going to reduce interest rates, in both the end of July meeting and then the 2 other meetings it has through the year. Will that happen? I don't know, but that's the expectations. When expectations are not met in the market, that tends to set us up for reactive moves, and the market of late has done a lot of reactive moves. So let's see what we can find out here. Here's where we sit as of about 9 o'clock this morning. Markets are all up. They, including the Dow, now is up to new highs. They have broken past last year's high. Russell still doing its thing as the redheaded stepchild, has not broken out to new highs. Will this be the opportunity? And one of the things that we've kind of been hinting at is that the Russell, made up of small caps, tends to do better when interest rates are falling. If interest rates start to fall, will the Russell then jump on board with the rally, thus pushing it higher, and also continue to drag along the Dow, the S&P, and the NASDAQ? Right now, the S&P and the NASDAQ, they're kind of pulling the cart up the hill, and the Russell is basically kind of has their parking brake on. So let's take a look at, before we get into that, let's take a look at some charts. I want to share a couple of charts with you today. Go daily, weekly. Let's look at this S&P. highlighted this to our premium members on the radar section of our weekly review. And what we have is kind of an interesting perspective. We are looking at a longer term, blow this up a little bit, a longer term, what you can consider a megaphone top. Some people consider these bearish, some people consider them bullish. The thing to actually take away from it, though, is typically the tops and the bottoms of these, the slanted support and resistance areas tend to be fairly strong. As we can see, the S&P is moving, and as reflected here in the spiders, is moving towards the top of this channel. Now, will it do it next week? If it does, it's up at about a 103, correction, 303, 304 point. We've just crossed over the 300 point, so it's only about $3 away from hitting the top of this channel. Could that set us up to, break and fall back down? Perhaps. One of the things that we've been noting of late is that you have to be set up to trade the pullbacks on the indexes. The pullbacks is where the the money is being made. So keep playing the pullbacks until they stop working. So we see that S&P is fairly close to the top of the channel. What about the other entities? Let's take a look over here at the Qs. There we go. One thing to note on the Q is we've had a nice breakout. Now this 191.32, which is where it broke out, that can act as a launch. Okay. I rechecked that. You should be seeing the charts, Eric. Is anybody seeing the charts? Okay, Mark's seeing it, Larry's seeing it. What? Okay, thanks, Eric. I hope the pictures you were seeing of me was one of my better pictures. So let's get back over here. What I'm looking at here for the Qs is one, we have now a couple of different perspectives we can take a look at. One is a pullback back down to 191.32 could provide us a launch point to go higher. Looking at next week, that 191.32 could correspond to approximately the 8-day moving average next week. The daily chart is over here on the left. As we can see, if the price action on the Qs are to reach up here to the upper channel, it's got a ways to go. It's got about 14, 17 points to go. And what does that equate to? Get a from current position back on up to approximately where this, just grab there we go. So we're looking at about a 12%, 10 to 12% run to the upside, which would be very interesting. if we take a look at, what would we want to be looking at getting into? We'd want to be looking at doing TQQQ and or doing some options, but we need a little bit of a pullback to help us out. Right now, we're extended away, and certainly this is not a market to short. We have no signal saying short me right now. No candlestick signals. All we have is an extended away. We're slight negative divergence on the TSI. Clearly a negative divergence on the TSI on a weekly chart, but no other signal saying that, hey, I've reached the high, I'm not going any higher than that, so no reversal signals as of yet. If the NASDAQ continues to push higher towards the top of its megaphone top, then the S&P should join on, get on board also and continue to rally more. IWM, the Russell. The Russell is even more regarding the megaphone top is actually even further away from its upper channel than the other indexes. Now, are we getting a good bounce here? Yeah, perhaps. Perhaps this level, 155, 155 level to 154, it's about 75 here. See where, 154.27. We're pushing on higher. We've got a level of resistance from this downtrend here to get through, and or the 158 level. And then 161 would be the next hurdle. But if we get past those and also take out the 173, then the Russell could stimulate and be the catalyst for the rest of the market to continue rallying fairly significantly through the end of the year. We'll see. Again, a lot of it will be, it will come back to is the Fed going to lower rates, and how many times. So for right now, if you're looking at trading IWM, I would look at potential pullbacks back into the 20, the 34, the 50, somewhere in this zone right here. Sometimes it's really a challenge to predict, and here's just a little tip for you. It's sometimes a challenge to predict exactly. If I take the exact number at the moving average, well, it's going to move the next day. However, if I just put a little box here and say, okay, if I get down into this area, and then sometimes you can just pick a number. I mean, like halfway in between the 8 and the 20, say 154.71. That would be, okay, that's the trigger where I want to get in. Where would my stop be in a situation like that? Well, I move back down below the 50 would be my stopping point. If I drop the 50 by 50 cents or so, I would want to be out. And again, that would be trading something along the lines of options, or you could trade the IWM. If you wanted to trade, let's say, TNA, which is a 3-time leverage ETF on this, you do a similar process. As you can see, price actions today drop down in between the 50-day moving average and the 8-day moving average. It's finding support about 61.25. I like the 50% retracement, but it's actually holding slightly above that. So just take a look, $61 or so. Might be an area where if you get some kind of a little intraday drop down to the area, be ready for a potential buy. So that's what we're saying. The other two entities I wanted to take a real quick look at were we'll take a look at what else is holding the market up. And right now I want to take a look at gold. And I'm going to look at gold futures. What are they telling us? Okay, weekly on gold futures over here to the left. We had a really nice rally coming up from about 1289, pushed on up to 14, you know, a little bit over, close to 150 bucks or so in the gold. And right now we are getting a congestion or a consolidation in this area here. So if gold comes down here and touches off the 8 or even the 20, that would provide us a potential trigger to get into something like the gold miners and or the leverage ETFs for gold, even GLD, buying and selling calls and puts on GLD. Our GLD itself would be an interesting trade. However, what we've gotten right now, like I said, we're getting a consolidation, a nice little box. Where is the safest place to, or you know, the highest probability place is to be waiting for pullbacks into the moving averages or these other support areas. Because right now, hey, we're holding the 38 to the 50% fib retracement. And if that continues to be so, we could look for a continued rally to the upside. Let's give us a little bit of a projection up here, because this projection here is based on this last move up. But I'll give you, just give you a really quick little upside projection on gold, which would be, and we've already hit a lot of the projections to the upside. But we just go from this high to this low. There. And as you can see, actually we've already hit some of the major extensions from that. The only next major extension would be up here at the 2618, which is at gold at 1487. What about oil? With all the saber rattling over in Iran right now, will that impact oil? As we can see, oil has started to, already laid in some of the fibs on this, oil has started to, come on, continue to rally up on a daily chart. All the moving averages are now in the bullish direction, heading up to the upside. Price action is above the 50, it's above the 8, it was above the 20, it's above the 34. Any kind of a pullback back into those moving averages would give us a potential to do a trade on oil. We did do a trade on the leverage ETF on oil and the exploration this past week, and it did, it did exceptionally well. We took it out with profit about 13% on the 2 positions we had. But again, I'm not going to buy right here because clearly we got resistance. So I want to see some kind of pullback. Here's the upside projections on how high oil could go. And that's basically based on if it hits symmetry from this low here up to this high here. Draw that in for you. If it hits symmetry from that move, symmetry would take you all the way up to $65.60. And so as we can see, only about half of that move is currently finished. And that's what I'd be looking at. The other thing we want to look at is what's going on with the dollar. Currently the dollar is, let me find it here. Now, as you can see on the daily chart, the dollar is kind of falling, which typically will send the market higher. However, on a weekly chart, the market, dollar put in a low down here about just below 96 and is in fact moving back up. So if the dollar is going to rally and move higher, expect the market to fall. That's kind of the expectations of what will potentially happen. One of the other things to keep your eye on is we are, and I'll go back to SPY. We are approaching the point where we would anticipate timing for a weekly high. And what I mean by that, it means, in other words, from this move from here to here, if this is a symmetric move higher, we've got timing for a potential resistance high in between the 15th and the 17th of September, of July. So next week could be a little bit of a slow go into that potential high because the resistance is coming up very quickly. And we'll see if it stops and, in fact, falls from there. Where would we anticipate it falling? Again, if it maintains its character, maintains its personality, we'll have a pullback into the 20, maybe the 34, and maybe if it's strong enough, it may only pull back to the 8. So just be standing by for any of those potential possibilities. So that's what I'm looking at going into next week. Earnings start next week, or well, actually earnings started this week, but we'll get going with our piece of earnings. Let me get back to my slides. Next week with our strategic compounding, here's how we're doing first quarter. Really pleased with strategy 2. This week took a little bit of a hit. But our objective with our strategic compounding is we basically want to generate 5% per week and compound that week after week for a year. And starting with a small amount, we started this strategy with only $10,000. It's up, it's up over 138% right now. And as you can see, the focus on compounding, again, that's our process. The results will take care of themselves. My target for this week is a little bit over $1,100, almost $1,200. And then next week, we will also, as I said, here's what we did for the strategy 2 for earnings trades last quarter, a little bit over $3,800. This week, we'll start the next session. This is Q3 earnings reports. Actually, it's Q2 earnings reports, but this will start taking place with Netflix. The other entities that report next week that I'm interested in, IBM and Microsoft. And this is for all active trend trading premium members. There's our potential other stocks we've taken a look at. Hey, if you're not a premium member and would like to join, we have a new special discount one. It is a 20% discount off the regular monthly rate of $124.99. If you join for a quarter, you can save 20% on top of that. So for $299.99, that's the discounted rate, and it's for a complete quarter. Just go to this go on the regular website, check out membership, and it'll take you to how to get signed up for that. NASDAQ. Isn't it kind of interesting, this NASDAQ seasonality? It shows that mid-month July, you tend to get a pullback. Isn't that funny? Here we are mid-month July, and we are hitting on timing on this year's chart saying that we're at a point where we can anticipate a potential pullback. So I find that a little bit interesting. Will it happen or not? We'll see. I mean, we'll just stand by. The NASDAQ has been quite strong for the year, as we know. Russell, similar type of thing in Russell. Russell tends to be a little bit more flaky and actually pull back more, but Russell has been the lagger this year. And so we have to keep that in mind also. So Russell could just put the nix on this and the kibosh, and if Russell gets excited at the end of July because of a rate decrease, it could basically go into rally mode. So here's some of the presentation we'll be doing moving forward. August 3rd, we'll be doing the monthly BAM webinar, and we'll be talking about the option with options this time. And again, premium members, 6:30 every Wednesday evening for our technical training and checking out the trades that we're working on. And if you have a group, I would love to present at your group, either in person, if it's here in Hawaii, or via webinar. I can do a webinar basically any place in the world. So from our team to yours, I want to thank you for joining us today. And here, of course, is my son, Brandon, who's on the active trend trading team now. And a few years ago, this was my wife and I at a CB ball. And here's Brandon, his wife, Sharon, and our 2 grandkids. And those 2 buggers right there are one of the reasons why I love to be trading in the market. So until next time, folks, keep growing the egg, trade wisely, trade profitably. If you want to reach out to me, there's my email, there's my phone number. And for premium members, we'll be getting ready to do the final hour at the top of the next hour and see what we have setting up going into the end of day and preparation for next week. So with that, from my house to yours, aloha, trade well, and prosper. Have a great weekend. And as we say here in Hawaii, mahalo, God bless everybody.